This is our daily top 5 gainers and top 5 losers analysis for July 5, 2019. This is in preparation for the next trading day on Monday, July 8, 2019. And everything that I'm going to say here is for short-term trading purposes. We're going to visit the technical analysis. We're going to discuss the technical analysis, and then I'm going to show you what I see on the trade and volume distribution and true market sentiment charts of these 10 stocks that we're going to discuss right now. So let's begin with URC. This stock closed today at 176 pesos per share, and the support that I'm seeing is at 152.4. Now for the resistance, I'm going to plot it somewhere here. We still have historical resistance near 177.33. Now, should it break above 177.33, we can plot the Fibonacci, the up Fibonacci, to find out where the 61.8% of the up Fibonacci extension is situated. So that's what I'm going to do right now. So here, okay, here you go. So your swing low is somewhere near 112, and your swing high is at the historical resistance, the immediate resistance at 177.3. Now, the 61.8% of the up Fibonacci extension is at 217.70, which is in confluence with one of the historical resistances also. So that golden ratio is agreeing, or it somewhat tells us that 217.70 is considerably a strong resistance level should the price break above 177.3. Now, let's check if the 10 SMA and MACD combo is still true. I think it's no longer true because the MACD is already moving below the signal line, even though the price is still moving above the 10-day simple moving average. How about the presence of the 4-point criteria? Let's check. We are seeing a green candlestick, and the closing price is above the VWAP of 174.73. There's a green volume bar. So let's check the trade and volume distribution chart. The dominant range is closer to the intraday high than the intraday low. It's somewhere between 174.7 to 176. So the 4-point criteria are perfectly present in the case of URC as of Friday's trading. How about the true market sentiment? This is how the chart looks like, and this is our statistics for URC. So I am seeing a neutral sentiment because 5 out of 10 brokers registered a positive net amount. On the other hand, 6 out of 10 brokers registered a higher buying average than selling average. But combining those two, I am going to give you a neutral sentiment based on the true market sentiment chart that I generated here. So what does this mean? For those who have had URC, you still have some data-driven reasons to top up. Now, for those who are still planning, who are still in the planning stage to enter a new position on URC, I suggest that I think you're better off trading URC or entering a new position by buying on breakout. Now, make sure that before you jump into the decision of buying on breakout, make sure that the 4-point criteria are present. Okay, there you go for URC. Next, we have FPH. FPH closed on Friday at 91.65. The historical resistance or the immediate resistance is at 92.30. Support level is at 75.95. Let me zoom this out. Should it break above 92.30, there's a resistance waiting at 111.43 or 111.4. So this is still a, let's see if this is a historical resistance, and it is. Okay. We have a historical resistance within alongside that level, 111.4. Should it break above 92.30, of course. Okay. So here, let's check. I can see here that the upward momentum is very strong. RSI is already playing inside the classical overbought level, but the volume, the bullish volume is still present. So let's see if it will sustain its ascent above 92.30. But let's check first the presence of the 10 SMA and MACD combo, and I think it's still present. For the 4-point criteria, I think they are still present, but let's double check by checking the trade and volume distribution chart. So this is your trade and volume distribution chart for FPH. Your dominant range is between 90, hold on, let's double check. The closing price was 91.65. Well, I would say that the dominant range is between 91.35 to 92. It's still closer to the intraday high than the intraday low. So the 4-point criteria are present. Let's check the true market sentiment chart. This is how the chart looks like. But this is our overall sentiment based on this true market sentiment analyzer. It is bearish. Why? Because 4 out of 10 brokers registered a positive net amount. Take note, only 4. And only 3 out of 10 brokers, or 3 of the top 10 brokers registered a higher buying average than selling average. So despite the presence of a green candlestick on Friday, the majority of the top 10 brokers are not, or they did not aggressively participate on the buying action for FPH. Okay, so we still get a neutral sentiment. What does that mean? For those of you who have had FPH, be alert on Monday, as a profit taking might be considered heavily within the 92.30 to 93 level, since RSI is already above the 80% or the entrance of the classical overbought level as far as RSI is concerned. Okay, but it doesn't mean that the ascending price is no longer more likely to continue. Well, let's see on Monday if it will break above 92.30 with the 4-point criteria still present. So if they are still present, therefore, the ascending price might just continue ascending to the northward direction. Anyhow, instead of guessing what will exactly happen, you are all better off being on top of your trailing stop loss. For those of you who are planning to enter a new position in FPH, you are better off buying on breakout for as long as the 4-point criteria are present. Okay, moving on to JGS, another index company. It closed last Friday at 68.75. Support is at 56.20. Resistance is at 69.6. Should it break out or break above 69.60, there's 79.15 waiting as a resistance. So 79.15 is waiting as a resistance level should it break above 69.6. Let's check the presence of the 10 SMA and MACD combo. I think that combination is still present. Yes, it is. For the 4-point criteria, I think they are present, but we have to double check by checking the trade and volume distribution chart. And I think the 4-point criteria are present as confirmed, with the dominant range being closer to the intraday high than the intraday low, and that's between 67.9 to 68.75. For the true market sentiment analyzer or chart, this is how it looks like, and this is the overall sentiment. It's bearish. Why? Four of the top 10 brokers registered a positive net amount, and only 3 of the top 10 brokers registered a higher buying average than selling average. What does this mean for those of you who have had JGS? This means that profit taking might be regarded as the preferred course of action once the price touches 69.6 to 70. Okay, let's take note here. Although RSI is still relatively distant from the classical overbought level, that scenario is not impossible to happen. So be alert and be on top of your trailing stop loss. If you are planning to enter a new position in JGS, you're also better off trading JGS or entering a new position by buying on breakout for as long as the 4-point criteria are present. If they are not all if they're not present or perfectly present, I suggest that you continue monitoring JGS and entertain the idea of doing a test buy only when the 4-point criteria become present. Okay? Okay, next we have DMW. DMW closed on Friday at 10.58. Your support is at 9.3. Resistance is at 10.65. If it breaks above 10.65, 12.44 is waiting as the next resistance level. The 10 SMA and MACD combo is still present. The 4-point criteria seem to be present, but to confirm that, we have to check the trade and volume distribution chart. And I confirm that the 4-point criteria are present because the dominant range of 10.58 to 10.66 is closer to the intraday high than the intraday low. Okay, so it's more likely for the price, for the ascent in price to continue and break above 10.64. I like what's happening on DMW's chart because there's still more room for this stock to break above 10.65. After seeing that RSI still has more room, we're still quite distant from the classical overbought level. On the other hand, the upward momentum is not yet very strong. Perhaps once it breaks, let me double check on that. The upward momentum, I stand corrected, is already very strong because with the positive DMI moving above the negative DMI and with the ADX being higher than 25 points, that makes the upward momentum very strong for DMW already. Okay, so you have some data-driven reasons to top up and to enter a new position on DMW. For those who are entering a new position, do not forget that you have to calculate your reward to risk ratio first. So don't immediately do a test buy just because the 4-point criteria are still present. How do you calculate your reward to risk ratio? Where's the formula? It's in our quick start guide. So please read again the quick start guide. Next, we have LPZ. It closed on Friday at 4.24 with the support at 4 peso per share and the midterm resistance at 5.06. If it breaks above 5.06, 5.78 is waiting as the next resistance level. The downward momentum is still very strong. Okay, it has not completely recovered yet. RSI is still approaching the neutral level. So it seems to me that LPZ found its psychological bottom at the 4 peso per share level. So if you're going to calculate your reward to risk ratio, as far as the support and resistance levels that I have mentioned are concerned, you're going to get a better potential reward than your potential risk. But let's check first if the 10 SMA and MACD combo is still present, and it is. MACD has just registered a golden cross above the signal line last Friday. The 4-point criteria, 3 out of 4 are present, and let's check the trade and volume distribution chart to confirm if the 4-point criteria are present. And I confirm that they are, because the dominant range of 4.2 to 4.24 is closer to the intraday high than the intraday low. But let's check what the true market sentiment chart tells us. This is how the chart looks like. This is what the statistics tell us about DMW. The sentiment is neutral because only 5 of the top 10 brokers registered a positive net amount, and only 3 of the top 10 brokers registered a higher buying average than selling average. Okay, so is the price still then more likely to continue? I think it is, because the 4-point criteria are still present. So you have some data-driven reasons to, I think, yeah, to enter a new position, especially that the 10 SMA and MACD combo has just been satisfied, validated, or met last Friday. So you can all enter a new position and do a test buy within that dominant range that I have mentioned. Now, if any of these 10 stocks begin at a price either lower or higher than those dominant ranges, I suggest that you request for the latest trade and volume distribution analysis or chart in our private clients forum. If you don't know how to post, please read the quick start guide. There are instructions there. Okay, so next we have PHEN. PHEN closed on Friday at 2.2. It's at the brink of testing the next support level at 1.87 as a precursor to 1.38. Your acting resistance is at 2.8. The bears have already somewhat taken over, and it seems that the downward momentum is already in a very strong category, and RSI is approaching it's still relatively inside the neutral level, although it's obviously pointing towards the southward direction. And by the way, the 10 SMA and MACD combo has already been invalidated more than 2 weeks ago, about 3 weeks ago. Let's not even check the presence of the 4-point criteria, because I can tell you right now that they are not present. So what does this mean? Okay, before that, let me show you PHEN's trade and volume distribution chart. This is where the dominant range is. It's between 2.2 to 2.33. It's closer to the intraday low than the intraday high. And let me show you the true market sentiment analyzer or chart. This is how the chart looks like, and this is the overall sentiment. It is neutral. 5 of the top 10 brokers registered a positive net amount, and 6 of the top 10 brokers registered a higher buying average than selling average. So don't buy PHEN yet. Don't do a test buy yet. At least wait for the validation of our 10 SMA and MACD combo. If you can't wait for that combination to become present again, at least wait for the appearance of the 4-point criteria. Okay, so far they are not present, so stay away from PHEN and continue monitoring it. Okay, next we have GSMI. It closed on Friday at 57.4 with the support waiting at 44.45 and the resistance at 63.72. Foreign investors registered a net foreign buying worth 17 million pesos last Friday. That's not as significant as their participation among the index companies. GSMI regarded profit taking when it touched the 63.7 level. That was the time when RSI hit the classical overbought level as well. So the 10 SMA and MACD combo has already been invalidated. I suggest that you postpone the plan of trading GSMI until the 10 SMA and MACD combo becomes present again. And if you can wait for that thing to happen, at least make sure that the 4-point criteria are present. For what it's worth, here are GSMI's TVD and true market sentiment charts. So the dominant range here is between 57.4 to 58. It's closer to the intraday low than the intraday high. And this is its true market sentiment chart. And the overall sentiment is neutral. So only 5 of the top 10 brokers registered a positive net amount, and only 7 of the top 10 brokers registered a higher buying average than selling average. I am not yet completely convinced that the majority of traders are already buying the dips. So wait for the presence of the 4-point criteria. If, you know, well, of course, it's better for us to wait near support at 44.45. But if you are in a hurry to trade GSMI, don't buy it yet. Consider the idea of doing a test buy once the 4-point criteria become present. Not yet now. Okay, moving on to Web. Web closed on Friday at 3.88. Support is at 3.84. Resistance is at 5 peso per share. Should it bounce away and go back, below the support level, that if when that happens, that will make 2.54 as your support level. The 10 SMA and MACD combo remains present. So if you still have Web, I suggest that you either, hold your position, if it's still moving above your trailing stop loss, of course. Do I see a data-driven reason for you to preempt your trailing stop loss? I see a reason because there's a towering volume last Friday, a red volume bar. I suggest that you sell a few tranches if you hold a sizable number of shares on Web. Sell a few tranches, preempt your trailing stop loss. How about those of you who are planning to enter a new position? Not yet. Even though the 10 SMA and MACD combo is still present, the 4-point criteria are absent. So wait for the appearance of the 4-point criteria once again before you do a test buy. And make sure that you calculate your reward to risk ratio. Okay? So there's an additional calculation of the reward to risk ratio for those who are planning to enter a new position on any stock. Don't forget that. Okay? The trade and volume distribution of Web it shows to us that the dominant range is closer to the intraday low than the intraday heights. With respect to the closing price last Friday, it's at 3.88 to 3.92. We can see here that the Web tried its best to maintain its position above the 4 peso per share level, but the force of the gravity, succeeded in pulling it towards the bottom at 3.88. Okay, so it made some attempts to maintain its position above the 4 peso level, as we can see on the bulk of trades and volume here, but that attempt was unsuccessful, unfortunately. The true market sentiment of Web, this is it, and this is what the overall sentiment is. It's a neutral. 5 of the top 10 brokers registered a positive net amount, whereas 7 of the top 10 brokers registered a higher buying average than selling average. The overall or true market sentiment here is neutral. So don't enter a new position yet. For those who have had Web, either you hold your position, don't top up, or you sell a few tranches by preempting your trailing stop loss. Okay, next, PLC. PLC closed on Friday at 0.75. Support is at 0.74. Resistance is at 0.87. 0.74 is your midterm support, while 0.63 is your major support. It's at the brink of breaking below 0.74 already. The 10 SMA and MACD combo has already been invalidated, and there's a tall red volume bar last Friday. It's more likely for the price to continue descending below the support level. Okay, let's check the true market or the trade and volume distribution chart of PLC. Okay, the dominant range is between 0.75 to 0.77. It's closer to the intraday low than the intraday high. This is the true market sentiment chart. This is what the this is the true market sentiment. It's bullish. Why? 7 of the top 10 brokers registered a positive net amount, and 6 of the top 10 brokers registered a higher buying average than selling average. Therefore, we got a bullish sentiment on this true market sentiment chart. If that's the case, why did the chart, or why did the candlestick end up being red last Friday? Well, it's simply because the those who sold PLC last Friday had a much bigger total traded value. That's why they outpowered the buying sentiment of their colleagues in the top 10 list. Okay, these two guys here, these two brokers here, got a much higher total turnover value than these buyers around here. But it's good to see that some of the brokers last Friday bought the dips. So let's see on Monday. There's a possibility for the price to bounce away from 0.74. Let's wait for some confirmations on Monday. Okay, that's not yet a guaranteed forecast. Now, if the 4-point criteria becomes present, and if the price maintains its position above the 0.74 level, then that could be a confirmation that PLC uh, translates 0.74 as a strong midterm support level. But again, we have to wait for some confirmations on Monday. So this is my advice. If you have had PLC and if it's still trading above your trailing stop loss, I suggest that you preempt your trailing stop loss. Sell a few tranches if it's a sizable holding. If you choose not to sell, well, you can hold your position if it's still moving above your TSL, but don't top up. If you are planning to enter a new position, don't buy just yet. Again, continue monitoring and see if it will respect the midterm support at 0.74 on Monday. Wait for the appearance of the 4-point criteria. Once they are present, don't test buy yet. Remember that one extra process that you will have to go through. I'm referring to those who are planning to enter a new position on any stock. What's that extra process? The calculation of your reward to risk ratio. If you're happy with your triple R, then go ahead and do a test buy. Okay? So last but not the least, we have tech. It closed last Friday at 16.5. Support is at 15.4. Resistance is at 22 peso per share, 22.10. The 10 SMA and MACD combo is already invalidated. And I am seeing a perfect bearish alignment among its 3 simple moving averages. The downward momentum is still super strong. Okay? And RSI is also trading inside the classical overbought level, but I'm not seeing any signs of reversals yet. So don't buy tech yet. Don't buy tech yet. And if you are still holding onto your position in tech, that only means you are not following our processes. Okay? Make sure that you are following our method so that you're going to have a more profitable than painful experience trading the Philippine stock market. No signs of reversal? Add it into your watch list, but don't do a test buy yet. Wait for the confirmation or the activation or validation of our 10 SMA and MACD combo once again, and the presence of the 4-point criteria also. So I am bearish on tech. But for what it's worth, here's the trade and volume distribution chart. It's closer to the intraday low than the intraday high, and it's between 16.5. Let me zoom it out. It's between 16.5 to 16.6. Bearish. And this is the true market sentiment chart. And this is our overall sentiment for tech. It's neutral. 6 of the top 10 brokers registered a positive net amount, while only 5 of the top 10 brokers registered a higher buying average and selling average, and that's the neutral sentiment. Stay away from tech for now. I am bearish on this stock. So there you go. That's my technical analysis, overall sentiment, and recommendations for these 10 stocks that I have discussed. Good luck on your trades on Monday and this coming Saturday, July 13. I am going to see you in Cebu for the evergreen strategy in trading the Philippine stock market. So we're in Cebu. Let me just show this one. So this coming July 13 Saturday, I'll be in Cebu at Max's Restaurant Banilad Cebu branch. Okay, from 1 p.m. to 5 p.m. If you are subscribed for 1 year at Equilist Analytics, you can buy your ticket at 50% discount. Okay, 50% discount. So here's the place. So subscribers from Cebu, I'll see you this coming Saturday. Let's talk more about this complete strategy on Saturday. Thank you, and have a disciplined and profitable trading day on Monday, and hopefully for the rest of the week. Bye for now.